Hello everyone, welcome back to the channel. Today we'll be talking about liquidity, what is liquidity, where to find liquidity in the market, and how to apply liquidity to your trading strategy. That is applying liquidity with supply and demands and break of market structures. Let's get down to business. But before that, this is the third video of this mentorship program, and if you are just joining us for the first time, please consider watching the first video on market structure, the second video on supply and demand, and if you haven't subscribed to the channel, please consider subscribing to the channel. What is liquidity? Liquidity is simply money. Liquidity is just where there is money on the price chart. So I'll be explaining liquidity using these simple patterns on this price chart. So what can we see right here? You can see price making series of equal highs and equal lows. When we were discussing things on market structure, I said these equal highs and equal lows will be very significant when we talk about liquidity. So pay attention right now so you understand why I said that. What you need to note is that the market is heavily manipulated. Yeah, the market is heavily manipulated. And what do I mean by that? This is basically equal highs and equal lows. So what does this tell us? Retail traders, what do they do when they see equal highs and equal lows? They see here as their resistance level and they see here as a support level. So what does that mean? See here as their resistance level means they have gotten this first touch, the second touch, and this third touch. And how do they trade their strategy? So let me clear this so you can see. So how do they trade this strategy? Let's say they got these two touch the first time and they extended their zone up to here. What will they be waiting for? They will basically be waiting for price. When after the second touch, they'll be waiting for price to return back to this zone. So they basically execute their trade after their confirmation. Once they enter their trade, they basically place their stop loss above the zone, waiting for price to go lower. And that's the same thing that happens at the support area. When price returns to their support area after the first touch, the second touch, they'll be waiting for price to return back. And when price returns back for the third touch, what do? They enter their trade, place their stop loss below this zone, and expect price to move higher. So when they trade like this, what do we see? We see that money is resting below this low and money is resting above this high. So when you see things like this, this is basically liquidity resting above here and below here. This is why I'm using the dollar sign to tell you that money is resting below this low. So let me explain this. We have here, this is the market moving up. This is an uptrend, and you can clearly see this is a trend line. We got the first touch, we got the second touch, and we got the third touch. Same thing happened here: first touch, second touch, third touch. So those that trade this trade strategy, what do? They place their stop loss below these lows, and you will see many people trade this strategy. Some of them, their stop loss is above here, because what are they doing? They are basically waiting for price to return, tap to this zone, comes back, tap to the trend line, continues that way, and placing their stop loss above here and below here. What does this tell you? This tells you that money is basically resting below here and money is resting above here. I'm sorry, my price chart is dirty. Liquidity just means money. When you see price doing this kind of thing, just know that liquidity is resting below or above these areas. That's what I'm trying to let you understand. So same thing goes to this: liquidity resting above here, liquidity resting below here, because those trading these strategies, their stop loss will be below these ones, because that's what the teachers. I know you've once used this kind of strategy and you understand how to trade it perfectly. When you trade, we advise to place your stop loss below these lows. So I want you to understand that liquidity is resting below those lows. I hope this is very clear. Liquidity, large pool of money, is resting here, here. This is just money resting here, here, and here. Liquidity rests below equal highs and equal lows. That's what I want you to understand. When you see these trend lines, understand that liquidity, large pool of money, is resting here, and the banks know you trade this way and they will always target liquidity in the market. The banks will always come to target this liquidity. They like to take you out and move to their direction. I hope this is getting clearer. If it doesn't get, if you're not understanding yet, just keep calm. When we move to price charts, I know you will understand better. You know, this is how I always teach after explaining with this kind of drawings. I now move to a price chart to help you understand better. But before we move to a price chart, I want you to understand how we combine liquidity with break of structure and then supply and demand zones to build high probability trading setup. Right now, I want you to understand how to combine liquidity with supply and demands together with break of structures to build a high probability trading setup. So what do we have here? We can see price form a higher high, push back. This is our higher low. Then we get a break of structure. After the break of structure, we see price starts to range. Price starts to range. When you see price ranging, what do you see? This is equal lows, this is equal lows and equal highs. So when you see equal lows and equal highs, you have to know that this is money resting here because their stop loss is above here and below here. What can you see? We got a break of structure right here. This is a break of structure. So this is our demand zone right here. So when we get our demand zone right here, what do we expect? We expect price to tap into this pool of money. When price taps into this pool of money, taking out those that are buying from there to go higher, price will take them out, taps into our zone. When price taps into our zone, we look to target the liquidity resting above these highs, taking these traders out. I hope this is very clear. So this is basically the way we combine this to build a high probability trading setup. So price comes back, takes out this liquidity, taps into our zone and still targets the liquidity resting above this high. So when you see a setup like this, this is a high probability setup. When you see liquidity resting above the highs and above the lows, that is a high probability setup. So I'm going to show you one more example before we move to the price charts. So the second example now, let's say this is our higher high, our higher low, then price starts to form a trend line liquidity. You can see it, this is a trend line, liquidity resting above the lows and equally resting above the high. So how do we build these trading ideas? You can see we got a break of structure right here, we got our demand zone right here. So what are we looking for? We are waiting for price to come back, take out those buying from this low because their stop loss is placed below this low. Price takes them out, taps into our zone and moves up, taking out the stop orders above this high. So this is a very good example. So we'll be moving to a price chart for a real example, so you will understand how we build trading ideas using liquidity, supply and demand and break of structure. So let's move to a price chart right now. What can we see from here? If you look from your left to here, you can see we got a break of structure and we got a demand zone right here, which price failed to come back to. So moving higher, we got a little pullback right here. After the pullback, we get a break of structure. So when we get a break of structure, you look for your demand zone. So this was our demand zone right here. Even this last candle doesn't have momentum, but we're mapping out our demand zone using this last bearish candle before the momentum kicked in and break structure. So mapping out our zone. When we mapped out our zone, we start analyzing what price is doing. So when we are looking at what price was doing, we can see price starts to form a trend line liquidity. What do we see? Price taps here and we got the second touch. We know this is liquidity. Money is resting below these lows because retail traders will be expecting price to come back the third time, touch the zone, and they'll still make the most out of the trade. But unfortunately, we see that price taps into our zone. You can see it, price came back, takes them out, sweeping the liquidity resting below this low, taps into our zone and moves higher, breaking structure. Can you see how we can combine liquidity to our trading strategy to make the most out of it? So what can we see right here? We got the break of structure. So when we got this break of structure, map out your demand zone. This is too large, so I can equally refine it to this candle, but price didn't come back to this, so moving higher. When we got this move that broke structure, what can we see? Price pulls back, moves higher, breaks structure. So this was a little pullback. So when we got the pullback, we map out the break of structure here. So this is our break of structure. So when we got the break of structure, what do? We map out demand zone, waiting for price to come back. We're basically looking at what the price chart is doing, waiting for price to come back. When we are looking at what price was doing, what can we see? After price broke structure, moves higher, we got a pullback. You can see it here. Price moves higher from here. We got a pullback and price moves breaking another structure. You can see it very clearly. We broke structure here. So when we got this break of structure, we come down, look for our demand zone. So looking right here, you can see this was a very good demand zone right here. So price came back, we got a little reaction, but it failed. Like I said, not all supply and demand zone is gonna hold. I've said it repeatedly, not all supply and demand zones is going to hold. So it's left for you to practice the more on your own to know the zones that is likely to hold or fail. Plus, when I talk about entries, it will still help you avoid zones that is not gonna hold. So let's continue. So the zone gave a little reaction, but it couldn't hold. Price came down, moves up again. So when price did something like this, what can we see? We can see that price came very close, forming equal low. You see, price tapped, moves higher, came back to the same zone, taps again and moves higher. So when you see these equal lows, what are you going to note? You will note that retail traders will basically wait for price to come back, tap to the zone once more and moves higher. And those already in a trade, their stop loss is resting below this low. So what can we see? Price came back, tap into this our demand zone right here. You can see it very clearly. Price came back, tap into our demand zone right here and moves higher. So when price taps into our zone and moves higher, what do we get? We get another break of structure right here. So when we get the break of structure, what are we gonna do? We come down, map out our demand zone again. So when we map out our demand zone, we start waiting for price to return. We look at how price return and analyze what price is basically doing. So what can we see? Price came very close, but it failed to tap into our zone and it moves higher. It doesn't break this high. It came very close to the high and drops lower again. What can we see? It's now forming a trend line, liquidity and equal highs. That is liquidity resting above these highs and above this low. What do we see? Price came back lower, moves higher again, came very close. It didn't break structure. Price is now in a range. Price came back again. You see, they are placing their stop loss here because they are in a trade. I'm not saying that support and resistance strategy doesn't work. I'm not saying that trend line doesn't work. All those patterns, double bottom, double tops, I'm not saying that it doesn't work. They work, but I'm basically teaching you how to trade with the institutions. Let's continue. After price was in this range of price and liquidity resting below these lows and above this high, that is, money is just resting above the lows and above the highs. What do we see? Price came lower, taking out their stop orders here, taking out their stop orders, taking their money. What can we see? Price came, tap into our zone. You can see it very clearly. Price taps into our zone and moves higher, taking their stop orders and taking this one out, taking them out of the trade. So this is how you can combine supply and demand with break of structure together with liquidity. I want to show you a bonus example. I'm just calling it a bonus example of liquidity in the market. So let's move forward. What can we see here? Right here we got equal highs here and equal lows. What do we see? Price comes down, taking out the liquidity resting below here. After taking out the liquidity, what do we see? Right here, price comes higher and take out the liquidity resting above it. We got equal lows right here. What can we see? Before price moves higher, it came down, tapping it below, taking out the liquidity resting below here, taking them out, and it moves higher. So this is how it works. This is what liquidity is all about. So what can we basically see here? Also, you can see price forming equal lows and we got a trend line right here. What can we see? Price comes, taps them out right here. Price forms equal lows again. It came back again, takes them out and moves higher, taking out the liquidity resting above there. So when price took out the liquidity resting above there, what can you see? We got a sweep of liquidity below here. Price moves up, taking out liquidity. We got a break of structure, and here is our demand zone. Price comes back, tap into our zone and moves higher. So this is how supply and demand zone works with liquidity together with break of structure. So it's left for you to move into a price chart and understand this on your own, practice on your own, and be the best trader you can be. But I want to tell you one more thing before I end this video. This is equally another bonus I would like to add. I would like you to avoid trading this kind of setup when you see them on the price chart. Let me show you what I mean. When you see price making equal lows and equal highs, and immediately you see price breaks structure, when you see something like this and you have your demand zone right here, I want to tell you that this setup is not valid. Don't ever trade this kind of setup, because liquidity is resting above this low and is resting above this high, but the liquidity resting above this high has already been taken out by price. So you can say this is a break of structure right here, a break of structure. But one thing you need to note is that liquidity is resting below these lows, because when price comes back, you might expect price to tap into your zone and moves higher, but you will always see price coming lower to take out this liquidity resting below these lows before it moves higher. The only way this kind of setup can be valid is when we get, when you get, before price moves out, it taps into this liquidity, taking them out before moving higher and breaking structure. So when you get this kind of setup, you can map out your demand zone right here and wait for price to come back, tap into your zone. So this is valid, and the first one I showed you is invalid. Don't trade that kind of setup, because this is exactly what happens here. You can see it. Let me show you. This is what happened here. This was equal lows, this was equally equal lows right here. So before price went higher, it swept the liquidity resting below these lows before it broke structure. So when you mapped out your zone, price came back, tap into your zone and moves higher. So this is how you combine liquidity with break of structures and supply and demand. So move to a price chart, practice these things on your own, map out your supply and demand areas, map out your break of structures, look for where liquidity lies in the market, because if you can't see liquidity in the market, basically that means that you are the liquidity. Price might take you out of your trade. So try to find out where the money is resting, because price will always come back to take liquidity before it moves to the direction it wants. Like I've said before, try to practice on your own. The next video will be talking about entries, and after entries, I think that will be the end of this mentorship program. Thanks for joining me again today. This is still me, Solomon Wisdom, aka Born to Trade. I'll be uploading the next video by this time next week. So thanks for joining me once again.